Hey everyone, it's Imran back with another episode of Trader Chats. Today I've got Jason Shapiro from the Crowded Market Report. Jason, welcome.
Hi, thanks for having me here.
Oh, pleasure. So we've never met before, so it's good to meet you. I've been doing a little bit of digging about you and saw that you featured on this unknown market wizard. So respect for that, because that's a pretty good accolade, right? You must know what you're doing in the trading world.
Some days I would say.
Some days. All right, cool. Well, why don't you, for those of them who are watching who don't know you, why don't you tell us a little bit about your background in trading, how you got into trading, and how you've spent your career whilst you've been doing trading, and what sort of stuff you've been doing?
I think I got into it the same way that a lot of people get into it. I was young. I was working at a job I wasn't very interested in. There was a bull market going on. Seemed very exciting. So I kind of got into it that way. That was when I was living in Hong Kong, and I started trading Hong Kong stocks and the Hang Seng Index and things like that. And that was a good, God knows, 35 years ago or something like that. And it just kind of went from there. I went through, I think, very typical things that a lot of people go through. Went through boom and bust cycles, made money, lost money, and, made a decision at some point that I wanted to stop doing that, and really took a look at what I was doing, really took a look at what I thought worked over time, and started to slowly focus on that process and that process alone. And then I sort of worked at a bunch of different places. I worked at some prop shops. I worked at some hedge funds. I had my own CTA, which I have right now, which is what I do now. I manage an institutional CTA.
Ah, interesting. I didn't know that. Cool. And how many years have you been trading then?
35, 30, wow. Something like that.
Wow. Okay. It's like nearly double what I've been doing, and I thought I've been doing it a while. But okay. So then how would you categorize your trading style? Have you got one particular trading style? And if you have, how have you kind of cultivated that edge? How did you realize that was what your edge was?
Yeah, so like I say, I as I was going through trading and learning how to trade and going through kind of like I think what most people go through, one of the things I picked up in some of the books was keep a trading journal, which I did. And when I kind of hit this epiphany point of I'm sick of going through boom busts and I really want to try and get this to a place where it's profitable over time, I went back through my journal and I kind of eliminated the trades that I found were not working over time. May have worked one time or two times, but don't work over time. And really just started focusing on the trades that I felt worked over time, and that had proven to be trades that worked over time. And that's really how my process developed, and the combination with sort of my personality and how I approach my thought process on life and that as well. So that becomes, I trade in a very, I guess I would call it a very contrarian style. And by contrarian, I'm really trying to fade mass psychology and mass participation. So I have data that measures that mass participation. And when it's showing that that's all lined up on one side, I'm looking to go the other way.
Okay. And that data is what? Is it the is it the CFTC data and the daily sentiment index or DSI data, that type of stuff you're looking at, I guess, right?
Exactly.
Okay. And then do you trade a lot of different assets, or do you just focus on like a handful of assets? How do you?
No, so I trade 37 different futures markets, all basically the U.S. futures markets that have liquidity is what I trade against. It's one process. So okay. I like to look at it like as if I were counting cards. I'm counting cards on 37 different tables, and when one table gets hot, that's where I'm getting involved.
Right. Okay, cool. So US liquid futures markets. And then do you kind of like to have a minimum number of positions on at once, or is it a case of when it's hot, I'll trade it, and when it's not, I won't? So sometimes you'll be very concentrated in one position, but sometimes there'll be a lot of opportunities and you'll diversify across multiple assets.
Yeah, I think that's right. I mean, when my process hits, I put the trade on.
Okay.
Sometimes I have one trade on, which stinks. But usually I'll have like somewhere between 2 and 5 trades on at the
Yeah,
same
yeah,
time.
that's so you
And
feel a bit more diversified then,
truthfully,
right?
the more trades I have on, the better usually, because I don't get a lot of trades. So if I have a bunch of trades on, then it means that a bunch of them are probably in the money at that time. So that's obviously a good thing, because I get stopped out pretty quickly of losing trades. So if I got 8 trades on, it probably means 5 or 6 of them are in the money.
Oh, okay. I was going to ask you about that. So how do you think about sizing stuff? How do you think about where you place your stops? Is it based on technical levels? Is it based on volatility adjusting the asset? Like, how do you think about that?
So on an individual trade, I have a very definitive stop. I'm really picking market turns, right? So if I buy a market and it makes a new low, then I didn't get the turn by definition. So that's where my stop is. If I buy it thinking this was the low, my stop is the new low.
Okay.
So it's a
Okay.
very defined stop. So my sizing then goes into that. I'm risking a set amount per trade of my portfolio. So I know what my entry is. I know what my stop is. So I size it accordingly so that if I get stopped, I will lose, a set amount of basis points per trade.
Yeah, fair enough.
And that's what every trade kind of looks like. But then once I have a portfolio of trades on, I start looking at the correlation between the trades, right?
Okay. Yeah.
And adjust position size accordingly. Like if I were to get, for whatever reason, a signal to buy, NASDAQ, S&P, Dow, Russell, and I'm risking 70 basis points a trade, then clearly that's not 70 basis points a trade.
Yeah, it's that times 4.
Essentially all the same trade, right?
Yeah.
So at that point, it's a
I was gonna
trade-off,
ask you about
because
correlation, yeah.
the truth is, if I were to get a buy signal on all 4 of those things, it makes the argument even stronger that the
Yeah.
market is going to go my way. But at the same time, markets can do anything. So
Okay, but to that point, then, rather than being willing to risk 4x what you normally would risk, would you still maybe risk 2x what you normally would risk? Like, would you put more capital at risk because you've got more signals triggering, but just obviously within a limit, or is it just always only a fixed amount of capital that you're in?
depending how the stuff is trading, and how I'm viewing how it's trading, and depending what else I have on the other side. Like in that example, if I were long all 4 of those things, there's no way I would have a full position on in all 4. I'd probably have maybe like a third of a position on in all 4. But if I had offsetting positions where I was short things that were correlated to those things, then I could have more on. It all kind of depends on the portfolio at that point. I tend to be pretty risk averse, so I'm going to be smaller than that most of the time.
Okay. And do you vol adjust your stops and stuff as well, or your sizing? So you don't vol adjust it. So the size on the size you'd put on oil, for example, would be similar to what you'd put on S&P.
Well, it'll vol adjust by itself because it's the distance from the stop. So if the distance from the stop is very far, then my position is going to shrink, right? If the distance from the stop is very close, then I'll have a bigger position on. So it kind of self vol adjusts in a way.
Oh, so the stop is vol adjusted, I guess.
Well, no, the stop is set in stone, but the sizing is based on the difference between the entry and the stop.
Sure, but I guess what I'm saying is, like, in oil, because it swings around more, you're going to put that stop a bit further away, I guess, so that you lower the chance of getting stopped. Correct me if I'm wrong. You lower the chance of getting stopped out because it swings more. So then you're obviously, because the stop's further away, you're going to have to size it smaller to risk the same amount of capital. Whereas because S&P doesn't move as much, your stop will be closer than the oil stop will in percentage terms, which then allows you to have more size. Is
well,
that fair?
not necessarily, right? I mean,
okay.
in other words, my entry, if I'm looking to buy oil, if everybody's short oil from my reading, and there's like a piece of negative news on oil comes out and oil closes up on the day, that's sort of my market confirmation to then buy it. So if it goes through that low, that's where I'm getting stopped. So my sizing is based on that low to where I got in. Now, oil might have reversed that day off the bad news and been up $5 on the day. So I'm going to have a pretty small size at that point. But if oil reverses and closes up 50 cents on the day, then I'm going to have a much larger size. So it kind of depends on that, It doesn't kind of depend on that. It 100% depends on that.
So the levels are very important. The kind of previous low and previous high that you're essentially trading against, that is what we're using as the stop.
Yes. So then
Right.
it's just a question of how far from that stop I got into the trade.
Okay.
That's
Makes
what will
sense.
determine my sizing.
Okay. That makes a lot of sense. Okay. And so this focus on fading crowded positioning. So it sounds like you said you analyzed the data of what you were good at, basically, what you were good at trading and what was working for you, and you've kind of homed in on fading crowded positioning. Does that mean that you're never, because you mentioned you run a CTA, so I tend to think CTAs are trend following type funds normally. Does that mean you never do trend following? And if so, how come? Because a lot of people have had success in trend following. So what makes you really not like trend following?
I think a lot of people have had success in raising money into trend following. I don't
Right.
know if they've had success of having good returns in trend following. I could be proved wrong on that, but that's just not me. You know what I mean? It's not what I do. I mean, a CTA is just a regulatory name, right?
Okay.
My regulator is the NFA, right? So therefore, I'm a CTA. I'm not an SEC, because if I were doing stocks, I'd be SEC. Yes, a lot of CTAs are trend followers. I am not one of them. I am, in fact,
The opposite.
very well. I wouldn't call it the opposite, because I'm not fading trends necessarily, because I'm not fading price.
Right.
I'm fading
Right.
participation, right?
Mhm.
But my returns are definitely negatively correlated to trend following, which as a business is why institutions give me money. If you're running a managed futures fund of funds,
Mhm.
um, yeah, you could give money to a bunch of trend followers, but they're all going to be pretty correlated. So what's the point? So you need to find something on a portfolio basis that can have positive returns with negative correlation.
Yeah.
And that's what I do. That's what I provide them.
Okay. So then when you get into a position, because positioning is crowded, would it be fair to say that you like narrative shifts? You're kind of looking for narrative shifts because there's a narrative that's been pervasive that's got people into certain positions and certain viewpoints, and you're waiting for that positioning to get quite extreme and you fade it. And then is it a case of, because this year's been full of narrative shifts, right? That's something I've noticed. So would you say that's been particularly helpful for your style, because on that narrative shift is when you make your money?
I find that narrative follows price, right? So by
Right.
the time the narrative shift comes, I'm probably getting out,
You've
right?
already made the money. Yeah.
Right.
Okay.
So yes, the answer is yes. I love narrative shifts because it means I'm probably taking
They
profit.
confirm your position, basically, narrative
Right.
shifts.
Right. So I'm probably taking profit at that point, So
And would you agree this year has been one of those where that's been particularly successful? You must be having a good year, I guess, then. Right?
I had a very good first half of the year. The last 3 months, I'm basically flat.
Okay.
But the
But
first half
earlier
of
in
the
the
year
year.
was yeah, for a 6 month period was in probably my top 85% 6 month periods.
Let me shut the door because it's noisy here. Sorry about that. So, yeah, because exactly, like, this year we came in with the China reopening narrative being a big one. Dollar was going to go to zero. Then you had the banking crisis and the recession that everyone was worried about. I mean, none of the consensus trades are working, right? I saw a recent podcast of you mentioning that you don't like shorting equities because you think it's like taking heroin, which cracked me up, by the way. That was great. It was a great analogy. So is that something you, again, stick by, like this year or ever? Like you just don't like being short equities, or you do sometimes dip your toes into shorting
If
equities?
my system is telling me to short equities, then I short equities. But I think what I was saying, you must have seen one of the videos I did. What I was saying is it's just not something you should do very much. I mean, my system doesn't get me short equities a lot. It did fortunately get us short equities towards the end of 2021. And I was comfortable at that point doing it because of what I was hearing as a narrative as well as the positioning. But most of the time, I mean, short equities is a terrible trade, and it's a very addicting trade. It's the hero trade, right? And you've seen it. You've seen it all year this year from everybody, right? They all want to be short equities, and they're all warning you for your own good that the world is coming to an end. So you got to be short equities, and you know, and they never have to admit they're wrong because they say, it's coming, it's coming, it's coming. You know what I mean? Meanwhile, you're losing, you're losing, you're losing. So
why is it so sexy to be short stocks, do you think?
why is it what? I'm sorry.
Why do people find it so seductive to be short stocks? Why is that the vanity trade? Why is that the...
I mean, you make money shorting stocks and you're a hero, right? Everybody's depressed. Everybody lost money because the stock market went down and you made money, you know, like it's just the ultimate hero trade to me.
So it's the ultimate contrarian trade, basically, right? As well.
No, it's the ultimate stupid trade. You know, I always say that there's a fine line between being contrarian and just being stupid, right?
Okay.
And I mean, stocks of all these markets are the ones that have upward drift over time. I mean,
Okay.
short wheat, you know what I mean? Short the euro, short whatever, right? Shorting stocks. I'm not saying never, okay? Sometimes there are opportunities to do so, right? But you're fighting an upward drift. So
yeah, you look back at like hundreds of years of stock returns versus other assets, and there's just no contest, right? But what about using options to short stocks? Have you ever done that, or do you think that's a crazy idea or a good idea? What do you think?
I don't trade options.
You don't trade options?
Nope.
Okay. Never have, never will?
I have,
Okay.
which is why I don't.
Yeah. Okay.
Tell us. I'm a
bit
directional trader.
Yeah.
Okay. Options are not a directional instrument. Options are a volatility instrument. I have no edge in forecasting future volatility. So therefore, for me to trade options, in my view, is just stupid.
And in your experience, when you did trade them, did you find that it was just a premium bleed? Like that's why you stopped, or what is it?
Yeah. I mean, the last time I traded an option was in my personal account. It was a few years ago. I shorted Tesla. And I can specifically remember Tesla was at 250. Now, this was probably 10 splits ago, so I don't know what the real number is. But at the time, Tesla was at 250. I bought a put because my retirement account didn't allow me to short stocks. So I bought a put. Tesla went from 250 to like 175 over the next 4 months, and I lost money on the trade.
Yeah. It's a common story.
So, I mean, well, that's not something. If I'm directionally trading, then what the hell am I getting involved in that for? Sure.
Now, I don't want you to scare everyone off from trading options because that's what I do. Yeah, but totally hear you.
If it, you know, I show people what I do, okay? And that doesn't mean that what I do is the only thing that works. It's what works for me, right? I tell people all the time, if what you're doing works for you, then that's the only thing that matters. It doesn't matter what I say. It doesn't matter what your mother says. It doesn't matter what anybody says. If your P&L is the only thing that matters. If it works for you, then do it. You know, for me, options is not the thing. If it's a thing for you and it works for you, then hey, the P&L has no lie. It's just a question of being honest about it. You know, if your P&L is positive, then who the hell am I to tell you any different?
Fair enough. Exactly. And that's what trading's all about, right? Being intellectually honest about what works for you, right? And about what you have an edge in doing. And you found what you have an edge in doing after 35 years. And that's kind of every trader's goal, really, right? To find what are you good at and what helps you, what are you good at spotting and what style can you trade to actually make money consistently out of the market, right? Some people
certainly should be every trader's goal if their idea is they want to make money over time, right? Sometimes I question if that's what every trader's goal is. I think a lot of people out there are doing it for excitement and, you know, to gamble. I mean, a lot of people bet football. I think that they know damn well going in that they're probably not going to win money over time, but they do it because it's fun and it's exciting and it makes them, you know, they pay attention to the games a little closer and all that, you know, and there's probably deeper psychological needs as well that are above my ability to analyze. But, you know, sometimes there are people out there that are looking for, you know, sympathy and, you know what I mean? So they lose money and they can get sympathy, you know. But if your goal is to make money trading over time, then certainly the things you said are the way to go, you know?
Yeah. Okay. Yeah. I never really thought about it like that. Like other motivations to trade might just be for the excitement, just like you might go to a casino or whatever. But yeah, people clearly do that. I mean, look at Wall Street.
Casinos are filled with people, and I would think that a large percentage of them know that they're not going to make money gambling over time, and yet there they are. There they are. Like I go to a casino for something. I cannot gamble. I just can't do it. I could sit there and play poker just to pass the time for a few hours, right? I know enough about poker, and I can play small, table poker, and I could spend 12 hours. You know what I mean? And maybe come out even, maybe lose a couple $100. It's worth the entertainment value, but I can't sit down at a blackjack table or it just crushes me, having been a trader and having to want to make money doing it. I can't sit down at those tables at all. It offers me no thrill. It offers me no excitement whatsoever. It offers me only depression. So I don't go anywhere near that stuff.
Okay,
but people do. People do. So
okay, interesting. All right, cool. You already mentioned. I wanted to ask you about trading journals, but you kind of already mentioned that. But you clearly think that's a very valuable thing to do, right? I guess. Do you still do it, or is it you've been doing it so long now that you kind of don't feel the need, or do you still find value and benefit in doing keeping trading journals?
So I don't journal my trades like I used to anymore because all of my trades look exactly the same anyway.
Okay.
But what I do for the last 20 years on the weekends, I have written up like a 4 or 5 page thing about, hey, these are the trades I'm looking to do according to my process. This is what's going to have to happen for me to make those trades. So I have something. And then here, I also put on there a lot of, here's my view on the markets. I like to do that just because I like to go back and look at it and look how wrong I was and put it in my mind that you have no idea what you're talking about. So stick to your process. Okay. That has become, I have this crowded market report thing now where we do a weekly newsletter, and what was my 20 years of writing this thing for myself, which might be considered my new journal, is what has become our newsletter. Funny enough. So I do that in a way through that. But I do think that people that are trying to figure out what their process is and where they're going to go and where their edge is should absolutely be keeping track of their trades.
100%. Yeah. And it's good, isn't it, to get pen on paper and collect your thoughts.
There's so many advantages to it. What was I thinking at the time? You get to go back and see that you were losing your mind and you were losing discipline, and it helps you. You're going to go through these periods, and it's important to remember them, right? We develop a lot of defense mechanisms, and we develop a lot of faulty memory, right? You don't remember this, but you do remember that. But if you have it all on paper,
selective memory,
you can actually go back and see the reality of it all.
You can call bullshit on yourself, basically.
Exactly, which is
you biased yourself into forgetting that, but you remembered the good thing that you did, right?
That's right.
Yeah. Okay, that makes sense.
So I think it's super important for people to
listen up, everyone. That is good advice from a 35-year-old veteran trader. Yeah,
56-year-old.
Oh, sorry, but you've been trading for 35 years, right?
Yes.
Yeah.
I wish I was 35 years old.
Don't we all? Okay. And then so a few other things I was quite interested to ask you was, what are the biggest lessons the market has taught you? Because you must have had a lot over the years, right? So I kind of like to frame that in, what was the best trade you ever did? What was the worst trade you ever did? And are there any other lessons along the way that you want to share with us?
I think the biggest lesson, is the market doesn't give a shit what you think, man. You can think you're as smart as you want to be. I think I'm smart. You think you're smart. Everybody thinks they're smart, but the market doesn't care how smart you think you are, right? And if you're going to fight the market and if you're going to try to be smarter than the market, you are going to lose, right? So I think that's the biggest lesson, right? Stop trying.
What does that mean? Fight the market, and how do you fight the market, for example?
Oh, I know a recession's coming, so I'm going to stay short. It doesn't matter how much the market goes up. That's fighting.
Okay, fight the tape.
That's fighting the market. Okay. I know Nvidia is overvalued here at 30 times sales, and I know that AI is not going to be what people build it up to be, so I'm going to stay short.
Okay.
And watch the thing go up, 3 times in my face, right?
So lose discipline, essentially, right? Fighting the market is have no discipline, get married to a view and a position, and just believe that it's going to come good for whatever story you're telling yourself, basically.
That's right. That's right.
Okay.
I think that's the biggest lesson. You have to
Mm.
just admit you're wrong. You know what I mean? Who cares, right? Like I say, the idea is to make money. I'm wrong all the time. I'll be wrong every single day if I can make money every single day. I love being wrong if I can make money, right?
Yeah.
So
Yeah.
clearly, and it seems so obvious, but that's not how people are built, and it's not how psychology is built, and it's not how your mind is built. So it's very difficult to do. But
Mhm.
just admit you're wrong and move on, man. Who cares?
Yeah. No,
Otherwise, it's going to cost you.
100%. Yeah. Taking small losses is the name of the game, right? Like you need to get so comfortable taking small losses that it's like you say, you almost enjoy it, right?
100%.
Yeah.
I
Yeah.
say it all the time. I love taking a loss. People are like, what do you mean? I'm like, because now I'm out of the trade and I don't got to deal with it, man. I can
Yeah.
move on to the next one.
Yeah,
Like,
exactly.
who cares? My payoffs on my winning trades are a lot bigger, obviously, than my losses. I lose more than I win. So my
It's like
payoff.
taking out the rubbish, right? The bad trade is like stinking out your apartment, but the minute you cut it, you can chuck it out with the trash, right?
Yes.
It's not
Yes.
stinking anymore. It's not stinking up the rest of your house, right?
Yes.
Your portfolio, you know?
Yes. That's a good way to look at it. I like that. So
Yeah.
I think that's the main lesson, man. Be wrong. It's okay. In fact, it's
Yeah, I
more
think
than
people are
okay.
scared of being wrong, aren't they? People are too scared of being wrong. It goes against their egos as well.
100%. And that's why trading is not for everybody.
Mm.
I know people who they do it in politics. All these people that hated Trump and they got out of the stock market because Donald Trump was elected and the world was going to come to an end. Okay, well, how'd that do for you, right? And then I know the same thing on the other side. People hated Biden, so they're shorting the stock market because they think he's going to end the world. Okay, well, how'd that do for you, right? It's just so silly. Your opinion means nothing, man. Like that's really what it comes down to. If you really are serious about trading and making money over time, it has nothing to do with your opinion. Okay. You need to develop a process that have an edge, and you need to develop your mind so that you can stay disciplined to that process and only that process, right? That's the only way you're going to make money over time. I put a thing on Twitter last night. This trading the market over time is very, very, very difficult, right? And if you're not going to respect that thought right there, the chances of you being successful are going to be very, very low. This is an extremely difficult thing to do, not only because predicting the future of a random price series is very difficult to do, but also getting a hold of your psychology is very difficult to do,
Which is why a process helps, because then you're not second guessing anything. You're following a strict framework, and
Yes,
you don't have to get emotionally attached to that framework, basically, right?
exactly.
Yeah.
Exactly.
Yeah. Okay, I like it. Good, very good advice here. Okay, but then do you want to tell us best trade ever, worst trade ever? Just some war stories.
I mean, I don't know best
Anything
trade ever, but I
stick
think
out?
the most profitable trade ever, I think, was again, it was just part of my process. People were super short the Swiss franc at one point, and it stopped going down on bad news, and I got long the franc, and I think it was on a Friday, and over that weekend, the Swiss bank came out and said they were going to depeg from the euro, and everybody was so short that the rally was like 20 points and some 25 points in a day, right? So like I'm sizing to like a half a point stop loss, and the thing made 25 points like in a day. So I made like 50 times what I was
50 extra
risking,
capital, yeah, your risk, yeah.
So that was probably the most profitable trade I ever had.
Wow.
The worst trade I ever had, God, there's so many, but I think the one that really changed my life was shorting the Nasdaq in the second half of '99.
Ooh.
Which you think about it, you're trying to be contrarian, and everybody is talking about how much money they're making in these internet stocks, and the shoe shine boy is giving stock tips, and so you're Mr. Contrarian thinking, oh, this is a fade, right? But you're fighting the market, right? So I was shorting it, and at that point I had at least learned enough about stopping out, so I wasn't losing massive amounts of money, but I was consistently losing money, obviously shorting, because the Nasdaq went up, I don't know if it was 50% in the second half of '99.
Yeah,
And that really helped me change how I look at things, right? Stop trying to be contrarian just for the sake of being contrarian. Stop being contrarian price. Start being contrarian participation. And that's really where I found the COT data too, because the COT wouldn't have got me short stocks, as it turned out, until like January of 2000. So that would have saved me 6 months of extreme sort of pain. So I think that was, in a way, the worst trade, but in a way, the best thing, because it really helped me to get to where I am now.
Again, back to the point we were making about losses, right? Losses teach you, losses allow you to grow, right? If you're willing to learn from losses and grow from losses, they can be a very good thing, right? So.
I think it's just like everything in life, you know what I mean? We learn from much more from our mistakes than we learn from our successes, because our successes just teach us that we're good and that we're right and that we know what we're doing, right? Whereas our losses teach us, hey, you know what I mean? Maybe I'm not the smartest guy in the world. Maybe I'm not the greatest guy in the world, right? Yeah. So losses, it's just like any other thing that you fail at, are the great. They feel horrible at the time, but ultimately they become the best thing that ever happened to you if you allow them to be, if you learn from them.
Totally agree. All right, so now let's just switch gears a little bit before we wrap up to so you've started a newsletter thing. I'm sure you're doing really well. You share your trades with your subscribers, I'm sure. How do you cope? I mean, I do similar sort of thing, but like, how do you cope with? First of all, are you enjoying that process? And secondly, how do you cope with the fact that so many people just want to copy your trades and expect to get rich, right? And whereas I assume, like myself, that's not why you're doing it, right? You're doing it to educate and show people how it works, where you have a framework which helps you generate trade ideas, and then you put those on, the psychology that goes along with it, the stops, the swings, the emotions, all those things you're trying to help educate people about. But you're not saying just do all the trades I do and you'll get rich. How do you cope with that?
It's hard.
It's hard.
Yes, from the very beginning, you know, this thing was started because of the Market Wizards book. I had a lot of people coming to me saying, hey, I related to what you were saying in that book. You know, could you mentor me? Could you teach me this and that? And while I wanted to help people, especially at this stage in my life, I can't help hundreds of people at the same time. You know, I have a family, I have a job, you know. But one of the guys that did say that to me started a web page. He said, what about if I start a web page and you could centralize that whole thing? So he did. And we just send what is now my newsletter, what used to be sort of my journal, out every week. And then we have a Discord where we talk about stuff. But from the very beginning, I say to people, do not, and I still say to people, do not join this, okay? If the idea is you want me to give you the trades that you're supposed to do, right? There's 100 people out there that'll do that for you. Go join them and go lose your money with them and then come back and join us. Because what I'm trying to do is help you with this market psychology stuff. Yes, I put my trades on there, right? And yes, I get it. I'm in Market Wizards. I've had good returns over time. So why not just copy what I do and therefore you will get my returns? I get that thought process, but that's not, I say it all the time, that's not reality. That's not what you should be doing, because it's not what's going to happen, because you didn't develop this process. You have not lived with this process for 20 years. You're not comfortable with the up and downs of the process like I am. And on top of that, my process is, I have a business, right? I am being hired by people because I offer them negative correlation, right? So that's not your business, right? Your business is you want to maximize your P&L or whatever, right? My business is I have to make profit, of course, but I have to do it in a negatively correlated way over time, right? That's my business. So for you to, there's so many reasons why I get into people, why they shouldn't mimic my trades. And yet they still do.
I was going to say, but do they listen to you? Do any of them
do? Listen, I've had a number of people
on
my Discord send me messages saying, hey, Jason, you know, you've really taught me a lot and it's helped me develop my process. And this is the most profitable year I've ever had since I joined. And thank you so much. And that's wonderful, right?
Yeah, that's exactly what you want. You want that.
That's what I'm looking for. And I have a number of people that do that, but I do have a number of people that every tick, it's like, Jason, did you get out of that trade yet? Jason, did you get into that trade? Jason, did you? Because they're looking to mimic exactly. Yeah, and 100%. I can't stop them from doing that other than to consistently try to explain to them why I think it's a bad idea. You know,
but back to how my experience of it. Like, I want my students in my Discord to question my trade and say, okay, so you're bullish, so you've done this
Oh, yeah.
trade. I think this trade's better. Can you explain to me why? Why do you prefer your trade over my trade? And then we can have a back and forth and discuss. And not only do we, I could learn. I'm happy to learn from my students still.
No, absolutely.
After 20 years doing it, right? Show me what's wrong with my trade. Show me what's a better version of that trade, so we can all learn together out loud and all benefit from that experience. Right?
Absolutely. And there's a lot of that goes on in there. There is a lot of that. You asked me if I've enjoyed it. There are parts of doing this that I've enjoyed a lot. I've met a lot of sort of cool people. And I have learned a lot from a lot of people too. They bring things to the table, like you say, like, hey, here's what you do, but would this enhance it? Would that enhance it? And so I have learned a lot from it as well. There are parts of it that have been a little rough, but I am trying to eliminate or reduce those parts and enhance the other parts. I don't really care if the membership grows or anything like that. You know what I mean? I'm helping people, I feel like, or at least I'm offering help to people. Hopefully it helps them if people want to come and do that. But there are people that I have kicked off because they're on there for the wrong reasons. Right. And we don't have any shit talking going. Like, we're here. We've developed what I think is a really nice community. What it's turned into.
That's what it's about. Community.
And we're helping each other. Yes, I'm there. Yes, I show my trades. But the idea of me showing my trades to me is that they can see me going through my process and how I deal with the successes and the failures and the losing trades and the winning trades, so that they can see somebody going through that. Right. So that as they develop their process, they can sort of relate to that. Right. Yes, I'm a market wizard. Does that mean I don't have losing trades? No. Does that mean I don't have losing months? No. Does that mean that I don't once in a while, mess up and my psychology gets all messed up and therefore my whole process and my discipline gets messed up sometimes? I like to think the answer to that doesn't happen, but the truth is it does happen. And it happens lifetime. I'm only human, and people should see that, right?
Yeah.
That's why I'm putting my trades on there, so that people can sort of live and die with me through that, so it can help them as they go through theirs. But I tell these people, look, I trade one thing. You guys have the advantage of, okay, you can take the stuff that I do and look at it, but you can also take the stuff and you can combine a bunch of stuff. Don't try to mimic me. Be better than me.
Totally. Yeah. I say the analogy of, it's like when I was on the trading desk at wherever, BAML or Citibank or whatever, I would run the desk and I would have 4 or 5 junior traders who would all be running their own books and doing their own trades. And then we'd bounce the trades off each other and we'd discuss them and we'd talk about them. And now we get to do that on a global scale. We get to build these communities and kind of like be the figurehead who's like the desk head, let's say, in a bank. And you got all these guys doing their own thing, running their own books. And you can discuss trade ideas. You can tweak each other's trade ideas. You can try to see, what's the consensus between the group? Who agrees, who disagrees? Why do they disagree? Have we missed something in the trade thesis? These are all things that go on trading desks around the world. But now in the retail trading space, it's these Discord channels, it's these private chats that are allowing us to do that in a similar way.
I think so. And I didn't even know when we started this, man, I didn't even know what a Discord channel was. The guy who started the thing started it, and I was like, okay, I guess I don't know what the hell that is, but let's go with it. But it's been really cool, And like I say, I don't trade options, I don't day trade, I don't trade equities, okay. But we have things like in the Discord channel where people do those things and they talk to each other. It's nice. It really doesn't have anything to do with me, right? They're talking to each other, they're helping each other, and they might ask me, hey, what do you think of this? And I'll be like, I don't trade options, but it's been kind of cool to watch. It's been very cool to watch.
Yeah, it is fun. It's fun to watch.
It gives one a little bit of hope for humanity, a little bit,
Well, that's what community is, right?
We've
got to try to rebuild that, right, in society in some way, shape, or form. All right, well, it's been an absolute pleasure getting to know you and meeting you and having this chat. Hopefully the listeners have enjoyed it and you've dropped a few well, quite a few words of wisdom, I would say. Before we wrap up, you want to quickly say where people can follow you on Twitter and things like that, and learn more about you if they want to?
Yeah, I mean, we have this webpage, crowdedmarketreport.com. We are on Twitter, although the handle is something weird, crowded_MKT_RPT or something like that. And then on YouTube, I do videos every weekend. Usually on Sunday, we put them on there, which you can look under Crowded Market Report or Jason Shapiro Crowded Market Report. It'll come up, and I've got at this point, I don't know how many hundreds of videos on there. And it's the same thing. Sometimes I'm talking about, hey, this is what I think the market's going to do, but not really. Most of the time I'm on there talking about, this is how your mind has to be, man. You know what I mean? Like, this is how you get risk reward in your favor. This is how you do this. This is how you do that. Right. And sometimes I will reference the current market to give that example.
Yeah.
But it's not really, like I say, if you're looking for somebody to tell you what to trade right now to make you a millionaire this year,
move on.
There's plenty of people to go and do that. Like I say, go and do that. And when that fails, because it will,
we'll be here.
We'll be here. Come back, and hopefully
exactly.
I'll help you learn. I'll help you learn how to trade for yourself. You know, like we're trying to teach people how to fish, right?
Yeah.
Not give them a fish, trying to teach you how to fish. What do you guys say to these guys all the time? What are you gonna do when I'm dead? You're mimicking all my trades. Okay, fine. Well, what are you gonna do when I'm dead? Then what? You know what I mean? Like, come on, man. You know. So
that's hilarious. All right, man. Pleasure to meet you. I will call it a day there. Thanks for listening, everyone. And take care, Jason.
All right. Thanks for having me on.